Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, big shout out to Prime XBT for sponsoring today's stream. If you use our links down in the description, you can get up to a $7,000 deposit bonus. And if you also use the second link, you can get up to 25% off trading fees. For those of you who don't know who Prime are, well, Prime are a platform where we can trade not only cryptocurrencies, but we can also trade Forex, commodities, and stock indices. So a great all-round platform. And once again, thanks for sponsoring today's stream, Prime. Before we get into today's analysis, remember, everything discussed today is not financial advice. I'm not a financial advisor. This is just my view on the market and how I'm personally trading it. So now that's out of the way, let's have a look where we are. So following on from last week, nothing much has changed. The monthly is still obviously in a downtrend because we've not had a new monthly closure. The weekly, exactly the same. We did have a new weekly closure down here. And the daily, again, everything's in a downtrend. So there's no surprise there. Obviously, we finally broke out of the old range that we've been in for so long. We had done that last week, and then we're down here. And what we were talking about last week we were down here last Thursday when we were recording our last video for you guys. And we were saying down here that we were looking for a move back up to the June lows. So let's just quickly throw on the June lows, and let's have a see what happened. There's the June lows. Zoom back in, and here's a little snippet from last week's video. We were saying at the time that what we were looking for here after bouncing off this channel is a move up into this June low region, and if we start to see weakness here, then that's potentially a good short opportunity and a good take profit on longs. And fast forward to what happened, we came up into the June lows as a back test. We got a push through it initially as a swing failure pattern, then we got another drive up, and then we're starting to see weakness. I was posting to my guys in the group the Elliott wave count that I had at the time. It looked like a zigzag to me, and it looked like a complete zigzag, so that was good enough for me to enter a short, and I'm still sat in this short right now. I have taken profits, so if I do get stopped out, then I get stopped out at entry, and it's a winning trade regardless. And if price continues to move down, then great, we take more profits as price moves down. And obviously, if you guys want real updates in real time, we can see here this was at 9 o'clock that night. What happened at 9 o'clock that night? That was up here, this candle here. I was posting that in real time. This one we got the high, perfect short opportunity, and then we came back down to where we are right now. Okay. So what could happen here? Well, let's zoom out a little bit, and let's throw in a few things. So first and foremost, here's the volume profile for this old range. Now, I've done it like this, therefore I can flick between things, but obviously if we just use this volume profile of this old range as we left it, this is why it lines up. So obviously we've got the value area high lining up, we've got the value area low, and we've got the point of control. It just means that when we zoom in that we're not having to scroll back and lose it time and time again. So what can we be looking at here? Well, to the upside, quite simply, the same region. If price does manage to break up from here, then first and foremost, these June lows still acting like resistance. So if we do get another test on these June lows, bear in mind we have already tested it once, we have back tested it once, but if we do get another test, then we're looking for that reaction. If we see that reaction happen and we see a load of excess coming in, a load of breakout traders trying to break out into the old range, and then price pulls back from there, then we know we've got a good entry. If we get no reaction here and price continues moving up, then ultimately I'm going to be looking at this whole range here. It's exactly the same as what we were talking about last week. So this value area low of this bigger range and this point of control, if we do get up there, then I'll be looking hopefully for some sort of reaction in here. So maybe a new opportunity to add some more shorts in, or take profit on longs, or both if you're in that position. Okay, so that's quite simply what's going on here. Now to the downside, now I'm not saying that price is going to nuke here, but we do have another sideways range going on, don't we? Let's just drag this over to the lows and zoom out to the 1 hour so we see this a little bit clearer. So we're just ranging. This is very similar to what happened when price was back up here. We're just ranging between value. If we look at this, we're just ranging, we're just staying roughly. Yes, we were swing fairly in the lows each time, but we're effectively just ranging within this value area here. And that's pretty much what's going on right now. We're just ranging between the value area high and the value area low. High, low, high, low. We've just got a range bound environment. So how do you trade a range bound environment? Well, you ignore any noise in the middle and you're just looking for these outer regions. So quite simply, from a local perspective, if you are trading in the lower time frame, then we could be looking down here at this value area low, which would take out these lows. There's a potential there for a long. You know, it could even swing down into this little consolidation here, reclaim and back up, and you got another long trigger. Targeting your point of control, and then targeting your value area high. And if it does manage to clear all those, then you know you're targeting your June lows. Okay, same as to the upside. You know, we've just said then that potentially price could come back up to these June lows here, but it also might reverse sooner. You know, we could come up, have another back test on this point of control, gets above that point of control, looking for that value area high. It's quite simple. It's just a level to level environment. You know, I've seen a lot of traders on Twitter at the moment that, you know, they're just zooming out and looking at this on a daily now and saying, you know what, here we go, here's your trade, let's just trade here, and that's it now. We're just shooting for new all-time highs. You know, looking for these big crazy trades. And that's not how we would treat this right now. You know, if you are taking longs down here, then you're just looking to trade the range because we're still in a sideways market, sideways and down market. You know, could this be the macro bottom? Yeah, it could. It could, but this could have been the macro bottom. This could have been the macro bottom. So could this. But it continued. So let the market tell us what it wants to do first before we start getting excited. Once again, you know, what we want to see, if you're looking for some long-term holds from this sort of region here, well, we need to see some strength, don't we? So, you know, we need to see at least getting back into this range, at least. Because so far, we're just going down. We're going down, we're ranging, we're trending, we're ranging, we're trending, we're ranging. You know, until that reverses and we trend to the upside and range, and trend to the upside and range, then what's the point in holding something long term? You know, Moon Boys have been telling you to dollar cost average all the way down since 69k. And it's safe to assume that if you've been doing that all the way down, you're massively underwater. And even if you have been doing it consistently, then let's be honest, your average entry is going to be about here. That's a big move up to finally get your head above water. You know, price has got to move nearly 200% to get your head back above water before you start making profits. So that's a big move before you start getting into profit. Right? Think of it that way. As opposed to being a bit smarter with this and saying, well, what you want to do is you want to see some strength. So if you see some strength and say that this is the bottom, let's say, you know, I personally don't believe it is, but if it is, then, and we start impulsing out of here, then we start getting a structural change on a really high time frame, start making higher highs and higher lows, then start adding in. Yeah, fair enough. If this is the case, then you miss out on, you know, 10-20% move. But at least doing it this way means that you don't have to move 200% before you start to break even. So missing out on a few percent as opposed to dollar cost averaging all the way down, and you've got to reclaim 200% before you start getting back into profit, it just makes no sense. You know, DCA is just, yeah, for people that can't trade. Right, to the downside, what happens if we do break down from here then? Well, if we do break down from here, let's get rid of this. Let's get rid of this. And we'll go back exactly the same conversation that we had last week. If we do start breaking down, then this is what I'll be looking for. Now, obviously, we've said this before. Right now, we're at the bottom of this consolidation here. So it's naturally acting as support. If we lose this, then ultimately, I'm looking back down into this consolidation here. Okay? I'm not saying it'll happen in a big capitulation wick. If it does happen, it could do. But nobody knows until it happens. But if we do start to lose this range and price does continue to meander down, then I'm going to be looking around this region. anywhere between this value area high, which is coming in, call it 12k for easy numbers, down to the lows roughly around 9k. Okay? Well, call it 10k for easy numbers. So, you know, anywhere between 13 and 10k. Okay? If it loses that, then I'm going to be looking further down, and I'm going to be looking down at between 7.5 down to as low as 5.8. Okay? Now, some people will be watching this now thinking, oh, Spitty, you're a big bear, you know, you just want to ruin the market. I don't at all, because long term, I'm still bullish. You know, long term, if you zoom out and look at a long-term chart, you know, like most assets, things go up and to the right over the long term. It's not saying that it can't have a short-term pullback. We've shown this on the channel before, where if we look at previous corrections, you know, previous corrections are anywhere from 70 to 85%. You know, so far, what's the correction been? Well, it's been 77%. So yeah, it's within the realms of possibilities that it's a bottom. But you know, so is down here. You know, that's 82%. You know, come down lower, and that's 90%. So it's still within the standard movement. It's still within the standard movement. Okay, and there's still plenty of money to be made in a bear market. If you're a long-only trader, sit back, be patient, wait. Wait for that high time frame trend reversal. Okay? If you're a level-to-level trader and you understand how to trade a range, then you can be making a lot of money on this. All the way down. All the way down. Okay? That's something that's been posted in the group. You know, we posted this on Twitter as well. In the Discord, we're looking at this. So this is a little challenge that we set ourselves within the members Discord. And the challenge was quite simply, we just took $100, which was a Bybit airdrop bonus that they gave away a few months ago, and seeing what we could turn it into. This is, you know, you can pause the video and read it if you like, but this is the challenge we took, and the challenge was turn this $100 into $1,000 using only the techniques that I teach in the private Discord and on the website using our educational content. And within 2 months, just a little over 2 months, we managed to go from $100 into, last Tuesday we actually hit target, and we turned it into $1,000. These are all the trades, winners and losers. Average win rate came in at 58%. So again, proving that you don't need these 100% win rates that people promise you on Twitter and on YouTube. You don't need that. As long as you're using correct risk management, you can still win. And you can make damn good money. Okay, we are continuing with this in the group, and I update this weekly in the members group. So obviously, if you want to keep up to date with that, then consider coming to join our Discord. Obviously, it links in our website. Let's do the shameless plug. So obviously on the website, you've got a link here to the free Discord. In the free Discord, we've got, well, nearly 1,000 members now, which is brilliant. It's been growing rapidly recently. So obviously, if you do want to join, click this. If you want to take your trading to the next level, and obviously use the techniques that we were just talking about that we used in that challenge, then come join our co-pilot section. And this is where you get access to all the video content. Lots and lots and lots of video content. You know, it's not basic things. You know, about as basic as we get is, you know, standard retail patterns where we talk about how to counter trade them. You know, we've got order flow. We've just done another order flow video on Tuesday where we've released our new Delta profile template, which is a bit of a cheat sheet because it helps you spot where excess is happening at the highs and the lows. Very good opportunity for spotting reversals. You know, we've got full complete Elliott Wave series if you want to learn Elliott Wave, how to enter and manage trades. You know, and every other week as well, we also do the chat and chill streams where we map out our high time frame areas of interest, which is basically my swing trade ideas. So obviously, if you want to get involved with that, check out the link down in the description. And that's about it for today. Short and sweet. Once again, thanks for Prime XBT for sponsoring today's stream. If you've enjoyed today's content, then don't forget to hit that like button, leave a comment below, and consider subscribing. All right, guys, as you were. Bye-bye.